So today we're going to talk about how life insurance plays a part in estate planning. So we're not going to focus on incapacity planning as part of your estate plan, but rather what happens to your assets after you pass away. So life insurance is a contract between you and the life insurance company. You pay premiums and they agree to pay out a death benefit after you pass away. There are really four basic types of life insurance. You have whole life, which is guaranteed. You pay the premiums and it will pay out at some point. You have term life insurance, which is for a fixed number of years. If you were to pass away during that term, life insurance company would pay out. If you outlive the term, then that policy will expire. You have universal life, which may or may not accumulate cash value depending on the policy. In addition to going back to whole life, which also will accumulate cash value. And you have group life insurance that may be provided by your employer. So some of the roles of life insurance are to make sure that we have liquidity in the estate, potentially for paying any taxes that may be due, for providing security for a family member, a spouse, children, and then also making sure that maybe inheritance are distributed equally. Perhaps you have two children and you have a shore house and only one of the children are close enough to go to the shore house and you want to give that shore house to the child. Well, you may want life insurance to kind of equalize that distribution at the end so that one child gets more cash and the other child gets the shore house if that's what you wish. Some specific uses of life insurance. We can use it to fund trust for heirs. We can use it for business succession planning where the deceased party's estate is bought out by the surviving shareholders to make that smooth transition of the business. We can also use life insurance for charitable bequests as well to support your charities or other affiliations that you may be interested in. Generally speaking, life insurance is tax-free to the beneficiaries, although it may be includable in your estate for death tax purposes if you don't plan properly. There are things that we can utilize to make sure that that life insurance is outside of your estate for tax purposes, such as an irrevocable life insurance trust. It's typically also a good idea to have that life insurance paid into a trust for the benefit of the other heirs to make sure that those insurance proceeds are protected from creditors, bankruptcy, etc. If you need any assistance, give us a call, 856-857-6007.